So, hello. How's everybody doing today? How's sound? Anybody around? Don't be shy. Okay, look, some people are telling me sound is okay on another channel. Okay, good stuff. So, welcome to the show, guys. No trade calls, no recommendations. Are responsible for their own stuff here for educational purpose only. So as always, we're doing these about once a month just to go through what we're seeing in the markets, take any questions anybody may have. What I'm going to do is just to try and go through the main asset classes, discuss my view. Maybe that could be helpful for somebody. I know today's a little bit of a strange time, so probably not going to get a lot of people live. So I guess most people are going to be watching the recording. But again, don't be shy. If you have any comments, any questions, don't hesitate to write in, ask a question, and I'll cover it. So basically, here we've got a situation where we're still in extreme chop, a lot of wheeling and dealing. Market really not sure what it wants to do. Very thin volumes, market with very, breadth is really not that great. We're just having a little bit of an AI pump every now and again, which are keeping markets propped up. Now, if you look, the easiest way to look at this, if you go on the ES and you go to the weeklies, you can see how all these recent weekly closes were just going nowhere. We're just hugging this 4150 level. Okay, so all things being equal, we're still stuck inside of this range. It's a broader trading range we've been looking at. And we discussed at the beginning of the year, we wouldn't be surprised if we spend most of the year stuck inside 4,200 and 3,700. And so far, this is where we're trading. Obviously, the way we look at the market, stuck to the top end of the range. As long as we hold the top end of the range, we prefer to look for tactical shorts for a move back to mid or to the opposite side of the range. And, it is what it is. It's been fairly decent trading here. Now, one thing which I would continue to stress is that if you're looking for a broad move, a trending swing move, chances are you're going to get chopped up and, your capital is going to be stuck as long as we're inside this range. You really need, especially for those who want to press or want to get a little bit more traction, unless you get a daily close above the 4,200 or below the 4,100, we're likely still going to continue to be chopping around quite a lot. So I would call this the chop zone, and I would favor tactical plays inside this area. Hey, Knut, how's it going? Nice to see you. Welcome. So I would favor tactical trades inside this zone, and only on a day close above the 4,200, then that opens up possible swings to really for a silly melt up, towards that 4,500. And only on a day close below the 4,100, that opens up a move back into 3,950, possibly all the way back to the bottom end of the range. But bottom line, remember that we're still stuck inside of a broader range. Now, is the market trying to rotate higher, making series of lower highs? Sure, and it's kind of stuck here. So, the more a level gets tested, the weaker it becomes. So, ultimately, most people are going to be looking for this kind of break. But until you get the break, as long as the level holds, it holds. So you just want to be very careful here, okay? Not be buying ahead of a brick wall. Now, as I discussed, really one of the key dynamics you want to look at, an easy way to look at things is just focus on also what the market is trying to price in terms of basically the Fed, right? And basically, as long as we got a situation where the market is pricing something like 78% all the way into the 90s of no hike, just of a pause, then the market is going to have a fairly easy time staying inside that 4,200, 4,100 range. And it's likely going to continue to knock to the upside of that range and try and break higher. Now, if at any point anything happens, and you see basically the market having to price in a hike again, and this moves from 22 into the 50s, right, or even higher, then it's likely going to be very difficult for the market to continue to to try and press out, and most likely we see a lot of chop or a breakdown below this 4100 range. Okay, now again, this should be interesting this week. We'll have to see what gives. Next week is far more interesting in terms of data, but this week we got, you know, Fed speakers pretty much every day except for Wednesday. Every single day we got, you know, today we got Bostic, Kashkari, Barkin. Tomorrow we've got Mester, Boskas, Barr, Williams, Logan. On Thursday we got Jefferson, Barr, Logan. On Friday we got Williams, Bauman, and Powell speaking. So again, that's really a dynamic I would be focused on, and that's going to be very, very key. Okay. Now also, as long as any single day, if you're looking for the downside, no matter how heavy stuff is trading, if on any single day, again, you've got Google or Microsoft or one of these big weights in the NASDAQ, or these big weights in general, up 3 to 5%, chances are they're going to stick save it by the end of the day. So, you know, you don't want to fight the flows. You know, whether you agree or not, charts are still fairly bullish, right? They're a good location for them to fail specifically, especially on some charts, but you know, globally there's still a decent bid in the market. Again, if you're looking for shorts, I would continue to favor ES, Russell, or YM, and if you're looking for longs, you'd continue to favor NASDAQ. You know, you don't want to get short the strongest and long the weakest, right? Now, in terms of gold, nothing much it has changed. We're still stuck here. Sure, we'll look at DAX in a second. Gold is stuck here, right? We talked about it last week. We said, you know, you'd be flattening up all those longs into this brick wall and waiting for some kind of a correction. Now, the 2000 continues to be stick saved, right? And this is likely the pivotal level. As long as we hold above this 10-week moving average and the 2000, this is still in that sideways range. And, you know, possibly we could read this as 4200, 4100 on the ES. And it's just much to do about nothing. We're just waiting. Above here, you know, above those highs, that's where you go for the stupid squeeze. And below the 2000 day closes, that opens up a potential test back all the way into, you know, 1850, 1800. But for now, we're still, like most of the charts, we're still stuck in a fairly choppy range. As far as crude is concerned, you know, here it's going to be interesting to see what happens. We're still stuck inside this broader range we discussed, which is basically 90, 80, 70, right? Washington, not happy as it approaches the top end of the range. OPEC, not happy as it approaches the bottom end of the range, and everybody getting chopped up. So clearly, I think after what we saw recently, what you want to focus on is, you know, are you going to get stick saves here? Are you going to continue to see OPEC commentary if we press lower or not? But again, I just don't think there's much edge trading here unless you're trying to be tactical on headlines or something like that. This is not particularly interesting to me, but clearly you would expect it to continue to get stick saved around these lows, around that 65 mark. If it doesn't, then it could get potentially very heavy, washing out a lot of people. But I would suspect we'll still see a lot of chop and, you know, a lot of people getting in trouble here. Now, looking at DAX, well, you know, whether you're looking at Euro stocks or DAX, you're seeing they're just hovering at highs. You know, it's the same chart across the board, whether you're looking at US equities or here, you know, this Euro stocks, same thing. And if you're looking at DAX, it's still hovering here. There's not that much going on, right? Essentially, since mid-April, we're stuck. Now, I know there'll be people trying to draw all kinds of stuff. You know, maybe this is a diamond. I don't know. I'm not too big fan of chart patterns. But really, the way I'm looking at this is hovering, waiting for the next catalyst, right? Now, clearly, you've got a strong previous resistance that now is support, and we're stuck inside this range. So this is, again, you know, look at it, 4200 ES, 4100 ES kind of range, and it's stuck. And if we get daily closes above, it opens up the upside. If you get daily closes below, it opens out the downside back into these lows. But really, the market is wait and see. We need the catalyst. We need to see what's going on with data. We need to see what the market has to price in. You've got a situation where the market wants to believe in pause, in all the central banks pausing and the Fed cutting multiple times before the end of the year. That's why it's staying bid in this chop. But the data and the central bankers are telling us we're not going to be cutting before the end of the year. So here clearly we have a disconnect, the market and what the central bankers are saying. So we'll have to see what data gives. I mean, the situation seems fairly clear in Europe, whereas, you know, we're going to continue to see at least one more hike, but definitely no cuts this year for now. You know, that could change any second. And right now the Fed is on pause, and we'll have to see what the data points say, right? But it's the same charts what we discussed at the beginning of the session, right? Not much change. Now, the other thing I've been talking about on Twitter, and I think this is a key chart, is the dollar, right? And here, what I said is, you know, all those people that were buying the highs on equities, I said, be careful unless the dollar confirms, right? You be very careful, very suspicious in chasing new highs on equities, right? So right now it's, again, I almost look at this as, you know, 4,100 ES, 4,200 ES kind of, and we're stuck inside this chop, right? So really 103 is pivotal this week, right? Yeah, again, there's also going to be a difference as whether the dollar is just strengthening on its own pace. And in that sense, you're just likely going to see it strengthening across all the currency pairs, or whether the dollar is going to be strengthening because of some kind of risk off hitting the wires, right? And then in that case, you'll probably see it, strengthening against the usual suspects, but, you know, sold against yen as you get a little bit of a risk off bit going there. But here, clearly what you want to watch is that 103 level, right? This is extremely pivotal. The bears really need to cap it here, because above the 103, that really opens up a test of 106. And I think everybody got a little bit too excited here to the short side, especially with Druckenmiller's interview. Then he actually clarified. He said he doesn't have a huge short position market. People kind of misrepresented what he said. And right now we've moved back into a little bit of a more neutral territory at that 103, right? So you've got basically 106, 103, 100, and this is going to be the line in the sand. So as you can see, the theme across the board is all the charts are in chop, in broader ranges, waiting for the next catalyst. So whether you agree with the action, whether you don't agree with the action, whether you think central bankers have to do this or have to do that, the market is just waiting for the next catalyst, right? It's trying to press, it's trying to go for, that's it. We're at the end of the hiking cycle. We have to position for some risk on and rip everything, because here we go. Pause and cuts are coming, but it's not so clear. And as long as we don't have anything more definitive coming out, most likely we're going to continue to see a little bit or a lot more of chop, right? That's pretty much where we are. And on the FX space, that set up some decent trades, right? You see yen is still stuck here, but you had a nice little short trigger here, but you can see it's kind of like exactly like that ES chart, right? It keeps on trying to want to press higher. And as long as we're inside the 200 and the 100, this is a huge chop zone around the 135. Market is still looking for direction. Euro, we talked about the shorts on Euro. We were, when the end of the world, we were talking basically this whole rotation long Euro back into the 110. And then everybody got excited. We're talking, you have to pay attention to what's going on. Failure here, as everybody's getting a little bit too excited on the short dollar, opens up a retest back into the 105. And this could just be a little bit of a correction inside this broader range, right? That still ends up breaking to the upside. We'll have to see. But right now, surprise, surprise, we're still in some kind of a range. And this is a huge chop, right? 110, 105. And unless we trade above or below, this is likely going to continue to be very, very choppy, right? Very, very choppy. And it's the same trade across the board. Actually, you had that dollar also weakening when you got a little bit pump on a lot of commodities. You saw, DBC, DBA getting pumped. And then, bam, crude got smashed. Copper got smashed again. Very ugly looking chart again. You can see it on the weekly, right? Everybody getting excited buying copper, but this is unwinding, and there you go, right? So it's the same trade across the board. We just have to be a little bit patient. Also, if you're looking at that cable, stalling exactly where it should stall into this 200, into this 100. The key pivotal level here is the 123. As long as it holds above, it could likely retest these highs. If not, it'll likely open up the upside, maybe all the way back into 118. And it's the same chart. Aussie coming back down, Kiwi coming back down, CAD popping back up. But what is the theme? The theme is, even though you're getting some intraday moves, some nice 2-day moves, we're still in a sideways chop zone. And I think that's what people have to embrace, and people have to understand. If not, you're really wasting a lot of time, mental capital, etc., trying to force a big multi-day move because the conditions simply aren't there. It's a trader's market. It's a tactical market until we break out of these broader ranges. So instead of complain about it, understand where we are, have realistic expectations, and trade those ranges, because there's plenty of trading to be done here, whether you're looking at stocks, bonds, or FX. It's just you have to understand the ranges we're in and understand that until we get a real catalyst, it's still just going to be a range trade. It's not the time to look for big trades yet, unless you're trying to position a very big portfolio. Okay. Any comments, any questions? Everybody's very quiet, so I think that's a decent, quick summary of where we are, what to look for. If we have questions, I'm happy to stay on as long as people have questions. If not, we'll call it a day. Okay, rock and roll. So quick and easy this time, guys. Wishing everybody an awesome rest of the day. If you like these updates, don't hesitate to like them, so I know I should keep on doing these. And have a great one. Hope this was useful. All the best, guys. Take care. Bye-bye.